So Intel is actually one I've been watching closely, and so have my program participants. Actually, as a group, we looked at Intel very heavily last week, and we're all like poised on it. And what we've been waiting for was an earnings announcement because we didn't want to be taken off guard. And actually, yes, the earnings announcement, Intel didn't impress anybody, but the stock price didn't suffer too much, and it's actually setting my program participants and me, and now you guys who watch our YouTube show, up for a good entry. So we actually got our follow through. If I put my indicators, and anybody can go download these indicators if you want, but I'm going to put mine on right now. You can see that we got kind of a signal on April 22nd. That was the beginning of this week. We got a signal, and this was an end of day signal, Tuesday of this week, end of day signal. So Wednesday and Thursday, we were looking at an entry, but at the same time, we were also holding on to our reins because we wanted to see what happened to earnings. So yes, we got our follow through right before earnings. Earnings kind of kicked us down a little bit, but that gives us a new opportunity to buy at a lower price. We just want to make sure that after earnings that we basically have a double bottom. The idea is when we set up this initial covering position, in this case, we're either going to buy some stock or there is a good substitute option out there. Instead of buying the stock, you could buy the Intel January 2026 $15 call. I know for those of you that are out there with me, you're going to look at the $15 call and say, man, that has a lot of premium to it. But I really want to value the liquidity of the option. And that one also has a lot of, it's always a compromise between how deep in the money you go and how liquid the option is. So I found my compromise at the $15 calls, and I think that's a great substitute. I wouldn't just throw that out and say I'm going to buy stock. I would buy the $15 call, and I'm just waiting for a little bit of follow through to make sure that we're going to be on our way up. But the idea is we want to buy that initial covering position at as low a price as we can so that when we do sell premium moving forward, we get the biggest bang for our buck. So that's where we're at, SIP. We're looking for the best opportunity. We've got earnings now behind us. It wasn't that big of a deal. We just want to make sure that the signal that we saw on Tuesday starts to get the follow through again. We're looking to buy when the underlying stock is somewhere between about 20, 21, maybe at the most $22. And we're going to probably use that substitute option. And then we're set. We've got that initial covering position in place, and we're ready to sell that insurance premium in the future that expires every 3 to 5 weeks. And because that fear, unfounded fear, we're below that, a lot of people are going to be buying insurance from us and then never using it. And that's the whole idea. That's, if you think about it, that's the whole idea of every insurance, business in it. And that's why insurance business is so profitable, because people will pay for something that expires in a certain amount of time, that they want to have the comfort and feeling that if they needed it, they could use it, but most people never use it. That's exactly where we're setting ourselves up with Intel. That's why it's my pick of the week.
So basically, I am going into the market and I'm buying an insurance contract, which is called a call. That's priced at $15, and then that's my entry. That's my fee to go into business on this opportunity,
And
and
notice
then
that I'm buying that $15 option. Um, and this $15 option's pretty deep in the money. It's not like, we're currently trading up around $21, $22. Or actually, we're currently trading at $20. We've been up as high as $21. So notice it's very deep in the money, SIP, and it's also not going to expire until January. So it's less of this one that I'm buying and is less of an insurance, right? Because when people buy insurance, they usually buy it for like 3 or 4 weeks. They don't buy it for 8 months. And it's so deep in the money. This is more like a substitute for buying the stock.
and then I'm turning around, and then I'm
Yes.
going to sell, the premium or the insurance contract for a shorter duration, right?
3 to
Like,
5 weeks.
3 to 5 weeks, and then, like you said, if nothing happens, it expires, but you still have that initial covering position on,
People
right? So
still
then
paid me for the ability to have a nice, by own for them to own that insurance for 3 to 5 weeks, it gives them peace of mind, but the truth is especially with the VIX coming back down below that fear line of 26, the likelihood that they're actually gonna use it, it's just them paying me for the peace of mind, to have the ability to use it, but the truth is most of them don't use it, and that's what we do. That's
and
that's
then
what we do.
so if it expires, you still own the call, right? And could you
Yeah,
just turn around and sell another premium while
that's
you're
right.
holding that
That
initial?
that initial option substitute call option, right? Or if I buy the stock, that's just as good. That allows me to continue to sell these insurance contracts month in and month out all the way up through January of next year.
All right. Well, you're liking Intel. Intel's got a nice price range, probably very reasonable cost of doing business for the cost of some of those initial positions, at least compared to, some of the 100 plus, priced stocks, the $100 plus.
Let's
But
look at
yeah,
the option that I was talking about. If you don't wanna so Intel, my little tool here updates every evening. So yesterday when Intel, closed, it was at $21.49, and I'm talking about, buying this guy down here, the $15 call, right? So instead of spending $21, you're spending something like $7.90, right? Per share, or $793 for a contract, which is 100 shares of these things. So it's totally affordable, right? And so, like I said, the insurance contracts are the ones that expire about every 3 to 5 weeks. So the next one for the monthly is May 16th. The weeklies, as you can see, expire every Friday. These are the ones that people buy for insurance. These are the ones that we want to go ahead and sell, and they usually buy the at the money ones. So we sell the at the money ones. So I bought that thing for $793, and then I'm selling one for $111. So you get it, right? I
mhm.
invest $793, and then I make $111. And at the end of the 5 weeks, that one expires, and I go in and do it again. Every month, I sell something for $111, so long as I have that initial 793, in the bank. I started the business with a $793, and then every month I'm making 111, something like that. I mean, I'm just throwing out the specific numbers we found for today, but that's the process.